Hemang Jani joining us on the show to talk more about the markets, about the sectors and the stocks that look attractive in this market at this point in time. Very good morning to you, Hemang. And Hemang, we're only seeing a weakness actually creep into the markets, with the broader markets taking maximum of that hit. Which side of the fence are you when it comes to sectoral bets? Do you think now is the time to take a plunge, or just sit back and wait?
Good morning, and thanks for having me. Yes, clearly, last I think 2 3 weeks we've seen across the board weakness, and which is because of the aggressive selling that we've seen by the FIs to the tune of almost about 90,000 crore. But when we look at the earnings picture, anyway, this quarter was supposed to be slightly muted at about 2 to 3% kind of an earnings growth on the Nifty front. And the actual numbers are also not suggesting any great positive surprise as such. But I do think that this correction is providing a good entry point. Exactly where the bottom would be made, I don't think anybody has a good clarity on that. But we are somewhere there, and maybe over the next probably few days and few weeks, that base formation would start. And in terms of sectors and stocks, I do think that some of the banking names this time around reported good numbers. So surely some of the private banks, select PSU banks, FMCG has been a pocket which has remained slightly subdued, and the management commentary has not been great. So would stay away from FMCG. But automobile, pharma, and telecom, these are the spaces where I would be comfortable entering into during this volatile phase.
Okay, there are those pockets that you're still looking at positively, but I wanted a better sense from you, Hemang, as far as the numbers of TVS is concerned yesterday. The stock saw a sharp correction, 6%, and that's been the nature of this earnings season. Any bad number and it's getting punished quite massively. Do you expect a recovery today? Because there was that clarity that came in from the management on the con call that at least in the Navratri, the sales are up 10-11%. As far as Q3 is concerned, they're clocking a single-digit growth at the moment, but they are hopeful of a 7 to 8% growth for the entire year. Do you expect that's a case for a bit of a bounce back on that one?
I think the numbers were okay. There are two takeaways from the numbers and the management commentary. One is that the recently launched Jupiter 110 has been received very well by the market. And at the same time, on the motorcycle front, TVS has actually underperformed after a long time. So while that segment per se is likely to do well, our preference within the auto and the two-wheeler space at this point would be, Bajaj Auto, which appears to be a relatively better place because of the larger component of the export growth and a good management guidance. So we would go with Bajaj Auto at this point.
Bajaj Auto.
Yes and no kind of in stock. Hemang, AU Small Finance Bank is a high growth bank and has a catalyst that eventually one day they will become universal bank. Is that good enough reason for one should buy it? Because of a low base, it has high growth and there's a catalyst. Do you think this will qualify as a good small cap bank to or mid cap bank to own?
Surely, Nikunj, I think if you look at the performance of AU Bank over the last, let's say, couple of years, it's been pretty decent, and operating parameters wise also in terms of margin, asset quality, by and large, the bank has done well. The only issue, Nikunj, with this bank and the banking sector per se is that, the valuation of AU Bank is 3.2 on an FY26 book. So when the entire market is kind of going through this kind of a corrective phase, and when you have many other large private sector banks, available around the same or slightly lower valuation, then the tendency to go for, AU Bank will be less. But as a pure mid-cap play, even the way the company has grown, I would surely, be fine to have that as a part of my mid-cap portfolio.
Silver and gold prices are going higher. And what is the best way to benefit from that? Hemang, any thoughts? A month ago, everybody was talking about the mid and small cap stocks. Now they're saying, forget that. The real action is in gold and silver. For an equity investor, are there any ways in which you can benefit from this rally in gold and silver?
So Nikunj, I think some of the companies, like I think Hindustan Zinc has a fairly large component of the revenue, which is linked with the silver, and so that would be one stock that one can surely look at it. And I do think that, there are ETF products available in the market, which are hybrid also, and which are pure play silver also, which one can really look at it. So these are the two things that I can think of it when it comes to the silver participation.
Talking about
Is GMR Report a stock which you track?
Nikun, we don't cover the stock, but my belief is that when the entire this there was so much of exuberance and excitement around the mid cap and small cap stocks. This was one of the pockets which created a good visibility because of the kind of assets that they are owning, and more importantly, over the last 1.5 years, the way the company has been able to raise funds through equity dilution, despite the higher debt that they're sitting on, definitely means that there is going to be a good amount of stability when it comes to their balance sheet. So we do think that as a mid cap play, this would be a high beta stock because of the high debt, but surely it would merit a look into it. And we do have this as a mid cap stock in some of the portfolios that we are recommending.
Okay, a high beta stock, that's what you're calling GMR right now. But Hemang, have you looked at Metro Brands and VIP Industries closely? And I ask you that because quarter after quarter, Metro Brands continue to disappoint with its earnings. And even if you look at VIP Industries, we're all talking about tourism and how everybody is still carrying on with their revenge travel phase. But the company actually reported a loss this quarter.
Yeah, so VIP has been a story which is not played out for almost 2 years. It has actually missed the entire bull run that we have seen in the last 1.5 years, and the performance also has been lagging behind, despite the way the travel tourism has boomed. So while the brand is looking very good, the valuations are looking quite compelling. Till we see the actual print in the numbers, maybe people are not participating. So would avoid at this point. As far as Metro Brands is concerned, it's been performing quite well. I think last 2 quarters, the growth has not been that good. But we do like that story. I think within the entire space, this is one company which has a better range, better margins, and very high return on equity. So any meaningful correction in Metro Brand, I think it would be providing a good entry point.
68 points.
diagnostic stocks, it's been a while that anyone has spoken about diagnostic stocks, given the fact that you have Thyrocare as well as Dr. Lal. Both of them have posted better than expected earnings. There was a time when you had the concerns about price wars creeping in for the diagnostic space. Looks like that one has also taken a back seat. But the problem is that the valuations are high, isn't it?
Yeah, I do think the valuations are a bit on a higher side, but in this entire volatile phase, I think this is a pocket which is given a fair degree of stability, and also the numbers have been by and large, in line or slightly better. More importantly, the management is saying that the overall stability in terms of pricing and the way many companies are expanding would provide a good amount of growth. So I do think that it would be good to have some exposure to names like Dr. Lal, PathLab, or maybe a couple of other such diagnostic stocks. I think it will provide a good stable growth over the medium to long term.